Peter McGuire joins in to talk to us about his view on crude. Morning, Peter. Thanks for joining in. Peter, there seems to be no stopping on crude. Despite a stronger dollar, oil continues to trade firm, now at a 4-year high, around $80 a barrel. What do you think is leading to this gain? Is it speculative trade that's pushing crude prices higher, or fundamentally it seems like there could be pressure on supply and hence prices are on the upswing?
Well, good morning, Samina. Look, I think there's a couple of points that really add a little bit of weight to this. Certainly those new US sanctions on Iran, they're underpinning, and that's giving some fear to the market. There's talk of Total Oil pulling out of Iran. I think that may be a little bit of a wait and see. It's a fairly brave comment that to come out. Of course, you've got that stronger US dollar, as you mentioned. Also, and I think this is really probably the main point, is the Venezuela economic collapse. They are such a large producer, and it's really that the country's in a dire situation economically and, of course, politically. So all of those factors playing into it are creating a lot of turbulence in the market.
Peter, from here, how much higher could crude head to? Most, I believe, big brokerage houses, the likes of a Goldman Sachs, are all betting on higher crude prices towards the end of the year. Do you think levels such as $100 a barrel is actually likely in the next 6 to 8 months?
I feel as though that's a big jump for Brent to hit 100. We're 5 weeks away today to the OPEC meeting in Vienna. I'll be attending that, and I feel as though that everything's a perfect storm for OPEC. It's working well for them. The outlier, of course, is US shale. If you see some more geopolitical concerns and something really escalates big time over the Northern Hemisphere summer, then that could cause major concern. And, of course, that could underpin price to quickly escalate to 85 to 90. Let's wait and see. But certainly the hedge funds are behind it. Certainly the traders are behind it. Speculators are long. And everyone just seems to be, ratcheting up positions.
How do you bring up shale gas? Because at the end of the day, that's been missing in action. And we've seen historically, every time crude prices have spiked, shale production has got impacted, that's upped it. And of course, the impact of that has been lower crude prices. What is going on in the last couple of weeks is unseen or unheard of. Where is US shale, and why is it not sort of upping its supply in order to control prices?
Well, there were pipeline concerns, but more importantly, these guys are very happy. Samina, it's up 40% in the matter of, probably 6 months or so. So it's been a very strong uptick. They're mounting, more producers are coming online, of course, with more rigs. And we're running at, I think, at around about 10.75 million barrels a day. Unheard of numbers going back a few years ago, which is just underpins the global demand. I went to the International Energy Agency in Paris a couple of weeks ago, and this is the real story, I think, that a lot of analysts aren't picking up. Production and consumption. And we've got consumption rising at around about 1.5, 1.6 million barrels a day, and we haven't seen those numbers since the best part of the 1970s. And we've experienced that for 3 straight years, and it's growing again this year. So we'll be through 100 million barrels of consumption probably by this time next year. And India is such a huge importer, but more importantly, consumer, and that's only going to increase over many years ahead.
Peter, OPEC stockpiles are below their 5-year average, and the general sense is that with rising demand, rising geopolitical risk, crude may continue to rise. Do you think countries like the UAE, Russia, Kuwait could replace the crude output from Iran oil? Because that, again, could be the jack in the pack.
Well, it could be. I mean, these guys they could do very well out of it if you think of the likes of Saudi, certainly Russia, and how that all interplays. Again, I think it could play very favourably, Samina, also for the IPO for Saudi Aramco. This could be a masterstroke for them, considering that only a couple of years ago they were thinking is 40 the new headline, and now you doubled that at 80 for Brent and 72 for WTI. It could be an incredible valuation as far as the IPO. So all of those factors at play go into the mix. We understand where OPEC is with that overhang, and that's being worked through the market. And I think the next 3 to 6 months could be a very nice time to be an oil producer. I feel as though that it's only going to be a stronger market over that Northern Hemisphere summer. and that all goes into the play as far as, you know, trading and taking positions.
Peter, very lastly on crude, what I want to understand from you, if these are hedge funds putting their bets out, a stronger dollar should sort of work against crude prices, right? I mean,
Yes.
of course, we are working with an assumption that the dollar will continue to strengthen in the near term. But despite that, we are seeing crude move up as well. How does that correlation work? Has it actually broken down now?
Well, in some ways it has, but more importantly, those geopolitical concerns, if the dollar had weakened, I think oil would be sitting, WTI would be 76, 77, Brent could be at 85. Just the factor is that stronger US dollar over the last, 6 to 8 weeks has been upward. Have a look at the Indian rupee, it's 67.5, the best part of. All of those things into consideration. We've got a 3.1% 10-year yield. So, I just feel as though that this US dollar has probably got more upside yet, and I think that that's going to also contribute to the geopolitical and, of course, the trade talks. It's a pretty volatile world out there if you really examine and pull apart the artichoke. There's a lot of factors there that are creating a lot of tension globally, and that goes into the mix. And oil, of course, is the number one barometer, that and copper, to get a really good headline feel as far as what the overall global economic situation is.
Well, there's a take coming here. Peter, just stay with us. As again, Vandana Hari, the founder of Vandana Insights, she's also joining us right now. Vanda, good morning here. First up, crude again, Brent around $80. There is a very high spread. Again, if I take a look at the last 12 months, this is actually the highest spread here between WTI and Brent here. Looking at the fundamentals here, because again, if I'm looking at higher shipments coming from US, higher production coming from US, drilling rigs again, those actually have gone up. There was the inventory drawdown. Again, that was a positive surprise from US here. So from US, ideally, everything is negative for the oil price here. But in terms of hedge fund positions, looking positive here. So what do you make out of a trend here? And are we going to sustain above $80 once we cross that?
Hi, good morning, Piyush. You've mentioned quite a few things about what's happening in the U.S., and it is indeed a very important factor to watch on the supply side, because a lot of people are questioning where is the U.S. shale surge? Why is it not having a dampening effect on oil prices? And if you look at oil production in the U.S., it is indeed very strong. It's expected to be up nearly 1.4 million barrels per day year on year in 2018. Based on all the data, the rig counts, as well as the production data that we see so far this year, it is very, very strong indeed. A few problems. What's happening in the U.S., and you mentioned the widening Brent WTI spread. Now, while Brent is being supported far more because of the Iran, then we've seen this trend since 2017, all of OPEC's cuts, as well as the inadvertent reduction in production that happens in places in Libya and Nigeria, always has a puts a disproportionately higher upward pressure on Brent versus WTI. The other thing that's happening with WTI, and particularly in the Permian, which is where the most of the production boom in the U.S. is happening, is that it's increasingly getting landlocked. All the producers have focused their bets on the Permian. The pipelines out of the Permian, the growth in the pipeline capacity has not kept pace. As a result of which we see WTI in Cushing, which is what you see when you look at the NYMEX WTI price, is trading at a discount. Cushing stocks have been rising the past few weeks. And you see WTI in the Midland, which is the heartland of the Permian production, is also trading at a huge discount to WTI crude in the Gulf Coast, from where it can go to the refiners or can go to the export markets.
Right, indeed. Again, that becomes a very important cue here. But that's crude oil again. It's an action, $80 again, that perhaps Brent oil again is trying to play with the levels here. But on the other extreme again, metals actually are not showing any direction at all, barring gold again, which has actually broken down here. So, Peter, the question here is that we have our eyes, we have our focus fixed on oil price here. But metals actually, have they actually gone in no trade zone? There is a No major movement coming there. What's your view there right now? And if you have any view on the gold again, is that something which is really actually moving with respect to dollar here?
Well, Piyush, I mean, when you think of what gold's that heavy sell-off over the last fortnight to 3 weeks from that 1350 number, that then one would have thought with those geopolitical concerns, trade wars, all of the issues as far as North Korea, they seem to have subsided from a risk perspective. US dollar has strengthened very, very strongly in that period of time, and in turn, gold's been sold off at that 1280 headline number. There's probably further downside for gold in the short term. It's creating I think a lot of traders are pretty much short on it, and it's been pretty much a glory trade, picking up $50 to $60 on that move. The other side, of course, is the volatility seems to have come out of that market from the coppers and the aluminiums, those issues that we had a couple of weeks back as far as the aluminium producers and the oligarchs in Russia. That seems to have settled down a bit, I've noticed, on the LME. So at the moment, the trade is certainly long oil. Vandana's point's all about that Permian Basin and WTI. Hedge funds are all over it as well. So it just seems to be gaining momentum, and it's going to be a very, very interesting June leading up to that meeting, as I mentioned, in 5 weeks' time today in Vienna. So it could be a nice time to be long. Not suggesting it, but seems like plenty of traders are.
Well, that's actually the flavor right now. One again on oil price again, like for a very simplistic view for our viewers again, if they want to understand where actually finally the trend perhaps could be shaping up here, but primarily looking at the sort of trading positions again, you would be looking on the Asian desk or the Middle East desk here. What's your perception here right now from $80? Are we now in a range of 70 to 80, or you think perhaps it's too hot, too strong right now for oil price? $90 perhaps could be coming up, because a lot of brokerages, whether it's Barclays, Morgan Stanley, Goldman Sachs, they actually all have increased the 2018 gold price targets here.
You know, Piyush, it's almost fashionable, with all due respect to my fellow analyst community, it's almost fashionable to throw out numbers of 100. I've seen 300 out there. I am not a big fan of forecasting that, you know, that successive new psychological levels will continue to be breached. And the main reasons for saying that, first of all, I would say keep very close eyes on OPEC. I think OPEC as well as their non-OPEC collaborators will have to do something. OPEC has been reborn since 2014. They are 2016 rather. They are very, very mindful to present themselves as a balancing force, not just a force that's driving up, tightening supplies and driving up prices at all times. And we saw overnight, Saudi Oil Minister Khalid Al-Falih had a conversation with his Indian counterpart, Dharmendra Pradhan, because clearly the consuming countries are very, very uncomfortable. So, you know, OPEC, non-OPEC ministers are due to meet in Vienna on the 22nd of June. They might, I'm seeing some reports, there might be some informal meetings before that as well. I think OPEC will have to now walk the talk. It has been saying we are there. It's been giving reassurances. What does it exactly do? I think that's a big question mark. Probably not unwind the cuts. That might be a bit premature. But I think they will have to start putting some supplies back. I think there is some scope, especially with Saudi Arabia, which has been cutting more than it needed to producing below its ceiling, to put some oil back into the market. And then, of course, we have U.S. production growing as well. Earlier this week, the IEA reminded the markets that another factor that can push prices down is contraction in demand as a result of high oil prices. So, you know, for me, will it continue going above 80 to 100? I don't think so. There is definitely a floor at 70. We have problems with Venezuela production and the past few days Nigerian production as well. So supply concerns remain, supply outages remain. So definitely a very strong floor, but, you know, are we saying there's virtually no roof? I wouldn't agree. I think OPEC will step in very soon.